Welcome to the 10th anniversary of REIMAGINE 2021. Presented by Mousebelt. Coming up next.
Welcome back to REIMAGINE 2021. I'm Yonah Hochhauser, and today I'm glad to be joined by Tom Howard, BD and Growth at PowerTrade. Tom, thanks so much for joining us.
Thanks for having me, Yonah.
Well, and it's always a pleasure to speak to industry insiders like yourself. But can you first start off by giving us a little background, kind of how you got into blockchain?
Yeah, sure. I think like most people, I probably early in 2012, I saw this thing called magical internet money floating around Reddit and the internet, and I was like, oh, that sounds pretty cool. So I tried to mine a bit of it, mine some Bitcoin on my desktop at the time, and I left it running for about a day. It made about 1 penny, so I was like, oh, this is not that magical after all. So I ended up deleting it and regretting that ever since. But yeah, I really kind of it was something I watched here and there over the years. And then in 2017, Ethereum finally had this use case that was really working, and it was really starting to take off. And it was something that was really of interest to me at the time, which is venture financing, and in particular, angel investing. So that really got me interested in Ethereum. I had just sold a company of mine at the time, and I was looking to make a few angel investments, and the ICO concept was very, very intriguing. So really early 2017, I really went headfirst into it, and I've just been addicted to crypto ever since. So yeah, that's kind of how it got started.
Mm-hmm. That's interesting. You came in, kind of from the VC world. Now, one, I'm sure that even though your Bitcoin miner was only mining a penny at the time, I imagine that penny is worth a little bit more at this point.
Yep. Yeah.
I mean, exactly.
But that wallet was deleted, so burned.
Yeah, exactly. But I'm sure you've done quite well since then. I mean, listen, if we're looking, and especially if we're looking at it from the VC angle, it seems like the numbers are just going higher and higher. If we're looking at just token prices, if you would have told me anyone, a mere couple of years ago, that 30,000, is a bear market, they would call you crazy. And right now, people only kind of looking at the token prices. But if someone's coming from kind of the VC angel investing side of things, I mean, we're seeing astronomical numbers. Sam Bankman-Fried's FTX exchange just got valued at, I think it was 18 billion the other day with a $900 million funding round. OpenSea just did 100 million funding round. When you're looking at the crypto market and the blockchain space from kind of a fundraising and VC point of view, are we at an all-time high?
Yeah, it's a good question. So if you're looking from a VC perspective, you're looking for the technologies that are going to completely change the world. And you don't know whether, that will happen for sure or not. But if you think there's some probability of it happening, then you place bets accordingly. So if you think, all right, there's a 20% chance that crypto completely replaces the world financial system, well, that's a massive, massive market. That's all of money, right? So the upside of being right on that is very, very high. And so if you want to make sure that you capture that opportunity, then, and you think that will happen, the companies in this space are poised for massive growth. They're actually right at the beginning of their trajectory. So I think the valuations make sense, given that people are pricing in the potential growth for this, and it may or may not happen. That's the nature of venture capital. It might not happen, and it all goes to zero. But that's why you place bets in different theses, and and you kind of spread your capital into different areas. But yeah, I think what we're looking at now is kind of the acceptance of, all right, this is going to be around for the long term. This has kind of been accepted. It's not just a flash in the pan anymore. It's got a 10-year plus history. People are really taking it seriously now. And so it's time for serious money to come in and serious talent to come in and make this space more mature.
Mm-hmm. And, the blockchain space represents a very unique investment for investors, VCs, angels, otherwise, not only because of the potential to potentially, like you said, that's all of money and really make a huge return. But when it comes to traditional, let's say, traditional software investments, and an investor is investing in there, there's an inherent IP there. There's an inherent IP that is protected. But when it comes to the blockchain space, a lot of times, a lot of the projects are open source. Just look at sushi. They could just be copied, boom, and then, Uni, and they could be copied, become a sushi overnight. So when you're investing in the blockchain space, how does it differ? How much you have to take into account, equity plays versus, all right, a token is kind of the only way I'm going to protect my investment here. How do you approach that as an investor?
Yeah, so I think it's a question of value capture and moats. So in a startup, you have to solve a problem for a hard problem for a large enough amount of people. That's like the first step of a startup. But then the second step is actually capturing the value that you've created, right? So if you create some tool that does some amazing things for a lot of people, but you don't have any way to capture value, then your startup's not going to be worth anything. And so a lot of building a startup in the traditional space is actually figuring out the best way to capture that value in a way that's not extractive from your users and your ecosystem, but in a way that's win-win-win for the ecosystem. So this is a problem that every startup faces, and now this is in crypto with these open source smart contracts, DeFi, and DAOs. We're kind of exploring this in a completely different way. And so when we look at, I think the Sushi Uniswap thing is a really great example, because Uniswap just existed and it provided value and there was no token and it just did its thing. But users didn't really have any reason to have loyalty to Uniswap, right? And they had no reason to help grow that ecosystem. And so Sushi was like, hey, what you've done is great. We're going to take that and add a token to it so that the community actually has a sense of ownership and has loyalty and is incentivized to make the tech better, make the product better, and grow the ecosystem. And Uniswap quickly realized, okay, that token is actually the moat. That token is what gives the community that sense of ownership and keeps your community engaged and keeps them around. And now we're seeing really interesting things with both in Sushi and Uniswap, very, very interesting things in the governance areas of those ecosystems that, if there was no kind of DAO there that was governing those smart contracts, the community would not at all be that engaged into what's happening with that technology. So, yeah, I think it's really interesting. It's a completely new way of not only creating a new moat via community, but also a new way of kind of capturing the value of the community.
Mm-hmm. And I mean, it's very important, like you said, when we're speaking about these decentralized exchanges and kind of DeFi overall, very important to make the community feel a part of it. We're interested in kind of traditional finance that this does not exist. The board members do not care, whether their members feel like a community, even maybe if the PR department says otherwise. But when you're talking about this space, and it seems like in DeFi is very important, does centralized exchanges still play a role and have a place even after we're seeing the success of DEXs? Are there things that centralized exchanges can do and could provide value to their clients that just DEXs aren't there yet?
Yeah, I think so. There's a couple of things. So one, building decentralized technologies is a lot harder than building them the centralized way. It takes a lot longer, and it's really difficult to iterate on them. So I kind of see, on one hand, centralized products basically can offer interesting things in the crypto space much faster and bring it to market and kind of make these markets for it before the decentralized counterparts become available. So we're kind of doing that with PowerTrade with options. I don't think the technology right now is available to have a proper decentralized options market, which is why we've created a centralized options exchange that is kind of at the level of sophistication that you'd find in the traditional space that we kind of are lacking in crypto right now. But we, as a centralized exchange, we have a goal of becoming decentralized over time as the technology matures and we can decentralize different components. We actually started off with decentralizing our insurance fund. So our insurance fund is actually a DAO. It's a kind of the DAO is an insurance fund as a service for exchanges. So I think there's just kind of that technology. It's the path to getting there. It's path dependent. So I think as the technology matures, we're kind of going to have a delay, a lag with the decentralized tech. The other part of that is user experience. So, if we want to take this to the mainstream, not everyone wants to have self-custody of their funds. That's kind of a scary prospect. Like, oh, I've got my life savings on this like piece of paper, and if I lose it, then all my money is gone and my life savings are gone, right? And that is not really an ideal experience for everyone. And yeah, there's solutions to solve that, but there's a kind of a long road for education there. And really, I think there's a large segment of the market that would like to just say, hey, isn't there a service that can just do this for me and handle this for me? And so I think where we're actually going to go with this is this, there's the DeFi meme was kind of made tongue in cheek, but I think it's actually where we're going, where, we have DeFi markets and centralized custodians are interacting with the DeFi markets and providing that as a kind of endpoint to the masses. So I kind of look at what we're doing with PowerTrade is where this kind of we're kind of a gateway to a larger audience that is just not yet comfortable with the full custodial user experience.
Yeah, and you mentioned that it's way easier to at least the beginning to implement new features and things like that in a centralized manner rather than decentralized. And you guys recently introduced span margin trading. What exactly does that mean for an unsophisticated trader? What is a span margin trade?
Yeah, so span margin, it's also known as portfolio margin. So in crypto right now, most exchanges are what we call simple margin. They just kind of take, all right, you're going to go long Bitcoin, choose your leverage, and that's how much collateral that you need to put up for that position. With span margin, it becomes very important, especially when you're trading options, because the way that options pay off is kind of very dependent on the fluctuations of the market. So with span margin, you take, all right, you've got 5 options positions, a perps position, a futures position, and you kind of take that whole portfolio at once and you shock it up and down. Like, what's the worst that could happen? And if you have an options position that offsets your perps position, well, actually the worst that can happen is like not that much. So then your margin requirement for that is much, much smaller, right? And so this is how it works in the traditional options market. If you're trading on a brokerage in stocks, this is kind of expected. It's kind of the standard. But because the options market in crypto is pretty nascent, there's not really that many venues that offer span margin, and so it's not really that accessible yet. It's not kind of a very widely used thing yet. So we just offered that. One of the benefits on PowerTrade is that we have very low minimums. So you can actually trade with less than $1 trading options. It's something you can't get in the stock markets either. And so, yeah, you'll have span margin. You can trade different options, futures, perps with much lower collateral requirements, which means you can do more with your money.
Well, I mean, and it seems a little shocking that it took so long to get to the crypto space. I mean, because it seems like it's a more educated and efficient risk system, or you shouldn't have to put up more collateral if the numbers don't dictate so. And so it seems kind of crazy that up until now this hasn't existed. Are there other types of products or features that the traditional finance market that has developed over hundreds of years and has become more and more efficient, taking out the human factor, but it has become more and more efficient. Are there any of these other features that crypto doesn't have yet that institutional traders are really looking for and waiting for?
Yeah, I think, I mean, in the options space itself, there's a lot of kind of, you have your just kind of your vanilla calls and puts, but then you can construct these different strategies. So you can basically construct insurance on various scenarios using options and other derivatives. And there's things like interest rate swaps and credit default swaps, and kind of other things like that, where or like a volatility index, different ways that you can trade and hedge yourself within these markets. And there's kind of a little bit of like a beginning of these things in crypto. There's some people that are talking about it, but they haven't quite happened yet. So, in the next few years, I kind of expect those things to emerge as the market matures even more. In particular, there's a lot of talk about stable coins these days, and how much is a stable coin worth? And are they backed? Are they going to go to zero? And so it's actually, you can actually create a derivative product that kind of allows you to ensure the value of that stable coin. So if an issuer like Circle says like, hey, we're fully confident in our product and we're willing to basically ensure that, you can sell that on an exchange like PowerTrade and say, hey, we're willing to take this trade. They earn some premium for guaranteeing the stability of the token, and the other users are comfortable that their products, their stable coins are safe and insured. So yeah, there's things like that right now we're kind of getting the core of the derivatives market set up, and it just enables a lot of really cool use cases in the future for all sorts of different types of products.
Yeah, and we're slowly seeing DeFi add more functionality, and crypto trading in general, both even in the CeFi and the centralized exchange space as well. But I wonder if we're looking at the traditional finance, and at the beginning, the Bitcoin white paper was born kind of out of the 2008 economic recession and kind of Wall Street bust, and a lot of people, and especially the early guys, it kind of pointed fingers, at this, and I wonder if it's inevitable that essentially that the crypto and DeFi essentially just ends up mirroring and becoming, the exact financial system that so many people have issues with in the traditional space, just on the blockchain. As more complex and advanced products come on, that's not necessarily a bad thing. I mean, these things help make markets more efficient and so on. But in the traditional space, you do have kind of a barrier to entry, where your grandmother isn't selling credit default swaps because she doesn't work for Morgan Stanley. But once you're in the DeFi space and you take away those barriers and you make finance accessible, which is really a wonderful goal. I mean, if you think about it, we really should give everyone the opportunity to wealth and to forwarding and bettering their financial situation in life. But is there a point where we get into risky territory where, because DeFi will make it so accessible, once you start adding in these really complex financial products that the average person really shouldn't understand, is there danger there, and should there be something done, and what can be done?
Well, I would disagree with the assertion that they shouldn't understand it. And I think one of the most magical things that I've seen in crypto, most people they get into crypto because they're like, oh, this guy I know got rich on Bitcoin or whatever. And so they're like, I want to get rich too, so I'm going to get into crypto. And that's why a lot of people get into crypto, right? But if you want to be successful in crypto and not lose your shirt, you're going to have to start learning really fast, right? And there's so much going on in it, and it can be quite daunting for a new person. That what I see happen a lot of times is that people start learning really, really fast, and they're like, all right, I'm going to go try this like lending thing, and then the market moves, and you're like, oh wait, how does this lending protocol work? Why is my my funding rate gone up, or why am I about to get liquidated or whatever? And then they start looking at, oh, this is how lending systems work. Oh, this is how margin systems work. And so what I see in crypto time and time again is that normal everyday people are actually learning how finance works. So it's actually a massive financial literacy project. And I think that's really what is important when it comes to participating in the financial markets. So, the problem with, for instance, the subprime mortgage crisis was not that these products were inherently bad or that derivatives were inherently bad. The problem was that there was no transparency or auditability of the products that were being sold, right? So you had these ratings agencies that were saying like, yeah, these grade F mortgages they're basically just like A+ mortgages. So we'll just package them all together and kind of just hide that risk, right? And then you had this huge unseen risk in the system that nobody knew existed, and then it just collapsed. And so with crypto and blockchain and DeFi, everything in the entire financial stack is fully transparent and auditable in real time. You know exactly what is the underlying for everything. And so you can't have a problem like that, because anybody can actually easily look it up and say, oh, hey, this product is made up of like a derivative of ETH, which is actually, not as strong as ETH itself. And so, all right, this is actually a bit riskier. Let's be more careful with this. And anybody can just look that up and know that in real time. So I think that's really important. And that's what really differentiates and solves a lot of those problems from the traditional space. And the other thing is just like access, which is quite similar, but most people are shut out of the sophisticated financial instruments in the traditional markets, and there's just no possibility of participating at all. You just don't have any access. So I think it's very powerful that anybody can come in and access and learn and audit themselves. And I would say the last bit that's really important is the option to exit. So people might say, hey, why use a crypto exchange? I can just do it in a bank or in the traditional system. Like, why would we use DeFi on a centralized platform? Well, the answer to that is that if something goes wrong and you don't trust that platform, you can just take it out and hold it right in the blockchain directly on your own. If you say you have, an account at Bank of America and you don't have any other bank accounts, and Bank of America is like, yeah, you can't like bank with us anymore, withdraw your money within 48 hours. You're going to get screwed, right? Your money's going to get stuck because you don't have another bank account to transfer it to. And it's just stuck there with Bank of America, right? And this happens all the time with, especially there's banks that if you're involved in crypto, they just say like, oh, you've touched crypto, you're out, bye, you're done. With crypto, if you want to exit, you can. You just withdraw it to your wallet and it's yours. And I think that's really important at driving the right incentives so that, any centralized exchange or centralized custodian knows that you always have the option to leave, the option to exit, and they need to do right by you. Otherwise, you can easily go elsewhere. So I think that's a very, very important component of this.
Mm-hmm. Yeah, I think that's really important, especially so you mentioned the education. You said it's this financial literacy, which I think is important, because I think for too long people kind of relied too much on the banks and figured, oh, if I'll just leave this money with my wealth manager or with, they'll take care of it. And I think this idea of, as we've seen time and time again, people are trusting less and less to say, hey, if I leave this pile of money with you, you won't get greedy, or, you won't, I can't trust you. And people are starting to take it into their own hands, which, and if you're able to, and you feel confident enough, I think go for it. But you mentioned this idea of, hey, there still is this feeling that if you touch crypto, you deal with crypto, the banks don't want, or many banks don't want to deal with it. Do you think that this is a factor that's still making institutions not want to come in, this kind of still regulatory and clarity or a lack of clarity, or at least with the banks, that this idea that, oh, we're not sure, we don't want to, it's kind of dirty, we don't want to touch it. Is this keeping institutions still out, or is there other factors keeping institutions out of the space?
No, I don't think it's that, because there's plenty of banks that are very willing to work with crypto. I mean, like Goldman Sachs is starting their own crypto desk. It's just a couple of banks, Wells Fargo, Barclays, that are just I don't know, maybe they're just don't have the capacity to understand it well enough, and it's risk for them, and they just don't invest the resources to understand it and kind of de-risk it for themselves. So yeah, I mean, it used to happen a lot more in like 2017. A lot more banks these days are perfectly fine with it, and there's crypto banks that are dedicated to serving clients who are in the crypto industry. I think what we saw this year was a lot of institutional actually has been getting in, not only Bitcoin but also in Ethereum, and there's a lot of different instruments for it. So MicroStrategy kind of set this playbook and has been teaching companies how to buy Bitcoin, and Tesla took that playbook and put some Bitcoin on their balance sheet. And then you have a lot of different institutional products like the Grayscale Trust and other kind of ETFs that are coming to the market. I think what may be holding things back is just uncertainty. So insurance is a big one. If you want to get, there's been various ETFs that have been trying to get approved in the US. And one of the biggest blockers there is that no one is willing to insure Bitcoin because nobody knows what it could be worth, right? And so the insurers are just like, how do I value the risk of this? And in order to get an ETF, through, you have to have insurance. And a lot of institutional risk policies require insurance on the assets as well. So that's like, it's just like the product that, because the financial system is still a little bit immature in crypto, it's something like that where, all right, insurance is actually the thing that's kind of blocking a lot of these people from moving, but that's being resolved in various ways. And we're seeing, CME futures is a great workaround for that, where you're not holding the underlying. So you just go trade the futures, and it's on a regulated US securities exchange. So yeah, I think, institutions they move a little bit slower. It's not mom and pop are like, oh, I'm going to get into Bitcoin. They log in, they buy Bitcoin, and then it's done. There's a lot of different internal processes, and they're all different at different organizations. So yeah, I think it's just going to keep increasing over time, the number of organizations that are capable of interacting with the crypto markets. So yeah, I think it's pretty exciting, and we saw a lot of strides with that this year.
For sure. I mean, especially, if you're looking in the traditional markets, the interest rates, there's really nothing there. And so, why would you keep your money in a traditional bank at this point where you're getting no returns? And that's really given a much bigger appetite for risk to people when, they really can't do anything with their money except put it in a more risky place to get any sort of returns. And so kind of this really, what we've seen, not necessarily the best for everyone, but what we've seen is this really kind of big incentivizer, or at least draw into the crypto space for both retail investors and institutions, because they're actually being, for those low interest rates and actual returns being offered in the DeFi space and CeFi space. What are we going to see? What is going to happen to crypto when those interest rates do go up? Are we going to see the institutions that came in now go out because they have other opportunities? What do you foresee happening?
You're talking about the interest rates in the traditional markets?
Yes.
Yeah, I mean, that's always a big driver for risk capital cycles, right? The people are going to go for the safest interest rates they can find. So yeah, that definitely causes rotations. I think it's an opportunity for the everyday person who doesn't really have access to those so-called safe risk-free interest rates, right? That's kind of just a big money access only. So, and in particular, if you're working with a smaller amount of wealth, 5-6 figures, 1 to 2% interest rates is not going to move the needle on your wealth, but a 10% interest rate will. So I think the interest rates in DeFi are going to continue being much, much higher. And yeah, there's different types of risks to it. But I think that'll be more appealing for people that are working with a smaller amount of wealth. If you've got billions, and you just want to get, 1% a year and just keep it safe, then those products are great for you. But I think it's still going to be pretty appealing for another segment of the market.
For sure. I mean, and that's what we've seen DeFi, really show its potential. But the early days of DeFi was, yield farming and kind of, it seemed like it was, I want to say, I want to use degens, but internal. It wasn't really kind of the retail people coming in, but it was already the insiders kind of, make yield farming, like I said, and kind of just increasing their crypto holdings rather than a mom and pop at home saying, oh, look, I could get a return. But we have seen a steady growth since then, in more products that a mom and pop can go, even if they don't understand yield farming, that they really could increase their money, increase their value, and actually get returns. Now, Vitalik recently said that, or in his view, Ethereum needs to move beyond DeFi, especially as scaling solutions like Polygon and others really are showing that they work, and we don't really need to wait for E2.0 to make things actually happen. In your view, I mean, all we've been speaking about so far is clearly financial products. I mean, and that's what you work with, that's what you deal with, and that's so far where we've seen the blockchain show its potential. But do you see now being the time where we'll start to see other big use cases pop up, whether it be gaming or censorship, resistant social media, or anything like that on the blockchain?
Yeah, those are actually two that are of big interest to me. I've got a big fan of the Axie guys. They're kind of pioneering this play to earn NFT gaming system. So that's really cool, because you have a large segment of the population. They can't work because of the pandemic restrictions. These are people that they typically, to do their job, they need to go outside. Maybe they're doing some manual labor or something like that, and now they're stuck at home with no income. And being able to play online and earn money for contributing to the player ecosystem, that's been really huge for a lot of people. I've known the Axie guys for a while, and I kind of watched them come from nothing to starting to build this community, to really actually, the magic moment for me was he sent a video. They thought somebody was cheating the system. So they were like, hey, you have 10 connections coming from your house. Like, are you guys running a bot network or whatever? And they're like, no, it's my family. And they're like, what? Send a video proof. And literally in this house in the Philippines, there's like, here's my auntie, and here's my sister, and here's my son, and here's my grandma. And every one of them had a phone playing Axie, and they just showed their Axie screen. So there's literally 10 people in the family. They're all earning like $5 a day, which is more than what one of them would earn as a day laborer or something like that. And so this is actually bringing like generational wealth to this family in the Philippines. So I think that's really cool. So I'm pretty excited about kind of the future of gaming and NFTs. NFT as art is quite interesting as well. And the last one that you brought up was censorship resistant social media. I think that's becoming increasingly important. And I went back and forth on this for a while because there is a lot of manipulation and misinformation on social media, and it's kind of it's certainly causing problems. But the more I see it, they were like, oh yeah, we're going to put these restrictions on like COVID messages. You can't say something about COVID if it's not approved by the government agency. But then I saw messages from qualified doctors who were contradicting what the CDC or the NIH was saying, and like they were right, but they weren't allowed to speak on social media, and that's a problem, right? That if we're actually censoring the signal along with the misinformation, then I think we're throwing the baby out with the bathwater. And so I think it's actually very important for us to kind of not go down that path. And I think that censorship resistant social media is going to be very, very important for us. And we need to figure out the right way to do this and handle it. But it seems it's very clear to me that having a kind of Facebook being the arbiter of the truth and censoring is not only open to corruption and manipulation, but just open to just misunderstanding, and like they're just not qualified to make those decisions. So I think that's going to be I think it's a very important use case that we need to start working on quite soon.
Mm-hmm. I mean, and that's been there's been a kind of demand for that, or an outcry for that, for censorship resistant social media for a while. And one of the things that makes traditional social media like Facebook and Twitter and TikTok so powerful are the algorithms driving them. Do you see a censorship resistant social media being algorithmically driven, similar to the traditional ones, or do you see it as kind of a more organic free-for-all where people organically find the things they're looking for in content like that?
Yeah, I mean, if you've ever looked at a fire hose of social media, you'll immediately notice that you absolutely need an algorithm to filter it. So that's very critical, because otherwise it's just a lot of noise, and it's just not a good experience. But I think we, kind of the ethos of blockchain and crypto is kind of, all right, you have the blockchain, which is the immutable ledger, and it's the source of truth, and that whatever's there, is what happened. And then you have the user interface, and the user interface can kind of take that data and manipulate it and show it in a way that makes sense to you, right? So I think the algorithms, you kind of have you end up with some sort of market for the algorithm that you want to see, right? And so if you have the kind of the data in the back end, and it doesn't belong to anyone, but the interface is the curator, I think that model will be successful. The thing with social media is that in order for it to work, you have a huge network effect problem and a bootstrapping problem, right? Like, why would you switch to tweets on Ethereum when all of your followers are already on Twitter and all of your friends are already on Facebook? And so moving that over is going to be a big challenge, but I think Sushi actually showed us how it can be done, where Sushi was like, hey, stake your Uniswap LP tokens in the Sushi contract, and then you're going to get tokens when we launch the Sushi contract and migrate your liquidity. So I think a similar mechanism could work with social media. It needs to be very well designed. It's a huge project. And if anybody's working on this, please let me know. I'd be very interested in learning about it. But it's not something that we can just put up, immutable tweets and it's just going to work. It has to be a pretty big, coordinated, and well thought out effort to make it happen.
Yeah, I mean, and my issue with it, I mean, I'm sure that there's many smart people in the world and they could figure out solutions, but my issue is that once you, like you said, you have that algorithm being kind of the moderator or the collator of decides what information you see, because at the end of the day, all the data in the back end doesn't matter. It's only what you see that matters. So that can be, even if it's if you can never delete any of the data on the chain, but if the algorithm is biased, so the algorithm is censoring. I mean, that's really what scares me here, is that how do you get around the algorithm? Because if the algorithm says, all right, I'm no longer, or the algorithm is designed to no longer show this type of content, it doesn't matter if that data is still available on the chain, it is essentially, or in a way, censored. So how do you get around this kind of algorithmic bias or censorship there?
Yeah, so I think what's important here is the same, one of the same important properties for DeFi, which is the option to exit. So if you're using the mouse belt social media interface, and I'm using the PowerTrade social media interface, there's different algorithms that are controlling these different interfaces, what you see. But if you post and it shows up in my feed and I like it, you're still going to get the like in your client, right? And so we're still, no matter which client we're using, we still interact with each other. Now, personally, when Facebook started introducing the algorithm, I actually trained my algorithm to show me things that I wanted. I decided what I wanted my bias to be, and I trained the algorithm to reflect that bias. I was very aware that every time I liked something or hid something, it was training the algorithm to show more of this and less of that. And so with just a little bit more awareness and consciousness, you can choose the interface that provides you the algorithm that you want to see. So you choose your own bias, right? And I think that's important. Right now, I don't have the choice when it comes to the censorship of social media. I don't have the choice to choose my bias. And I think that's really important. The question of like helping people to become more conscious about their choices and changing their mind, I think it's a separate question from the freedom to choose.
Yeah, I think this is an overarching theme that we've been speaking about. Is kind of giving the people the power to choose, to make their own financial decisions, to make their own decisions, to expose themselves to content. And that really brings us to the last topic that we haven't touched upon yet, which is DAOs.
Yep.
And DAOs are really incredible. And I think, what we've seen from DAOs so far is just the first stage, just the first tidbit of what it enables and what it enables mankind to be able to accomplish in terms of the types of groups and coming togethers and decision makings that they can make. And we've seen it so far with kind of governing protocols. That's really been the major use case that we've seen so far in terms of dictating, trading pairs and fees and whatnot. But where do you see DAOs going? Where do you see DAOs affecting the everyday life of the person in the future?
Yeah. So yeah, we're still very early in the kind of life cycle of DAO technology. I've been a participant of a few DAOs, such as like Meta Cartel DAO. We went from a grants giving DAO to a venture DAO, where there's also like experiments like quadratic funding on Gitcoin, which was a donor and recipient of early on. So it's all very interesting, but I think what we're doing now is all experimentation for creating tools for all of humanity in the future. And the reason I think that's important is we're kind of at this point in history where we have democracy. The United States was kind of the first big success story for democracy, and democracy is inherently a decentralized technology. However, it was designed at a time when we didn't have electric technologies and computing technologies and all these other sort of things. It was designed to run off of messenger horses and kind of other slower forms of communication. So I think democracy itself needs an upgrade, and it's really become pressing because we have other governments in the world that are much more top-down, much more autocratic. And when you're running an autocratic system in the digital world and you have the ability to upgrade your digital technology, you can just run circles around systems that are running on older technology, right? And so I think we have a big problem now where autocracy is just able to outperform and outcompete on essentially every playing field. And that's going to be a big issue if we want democracy and we want to ensure that everybody has the best chance of having a fair shot at life and all of the other things that are kind of important in the ethos of democracy. And so what we need to do is upgrade the technology of these systems, of the decentralized systems. So DAOs, in my opinion, they have the potential to make a decentralized organization as efficient or nearly as efficient as a centralized organization. By leveraging the technology of the blockchain, we can actually potentially create self-organizing, fast-moving organizations that serve everyone instead of just serving a few. Now, technology is not the solution to all of our problems, right? It's all made up of a bunch of people. In DAO parlance, we call it, there's different layers of the technology stack. So we call it the social layer. And that's like, all right, how do you actually if you want a proposal to go through, like, who do you talk to? Who do you have to get on board to get the proposal through? Like, what is the community going to care about when it comes to this proposal? And so there's this whole dynamic of the social layer that's totally off chain. And so that's important too. But I think what is really critical here is while we kind of figure out how to organize ourselves socially in response to this increase in autocratic systems, we're going to need the tooling to organize ourselves digitally as well. And so, I think it's very important for us to be working on these DAO systems so that the tooling is available for when people need it, and kind of be doing that in parallel. So yeah, that's pretty exciting. With PowerTrade, we basically, it's a big step. We're a centralized exchange, and we're kind of giving up the control over a very important aspect of our business, right? We're saying, hey, this pool of funds, it underwrites our exchange, it underwrites our margin system, and we're going to give control of this to the community. It's not controlled by us, but everybody who's part of the ecosystem has a say in how this works and how it's governed and how it operates. And so that's a big leap for a centralized organization to kind of say that and just kind of give it up. And it can be a little bit scary, but I think it's very important and more powerful. And I hope we can advance the DAO technology through this kind of little experiments in our corner of the ecosystem.
Mm-hmm. Well, what I love is that you're not just preaching, but you're actually doing and really giving the power to the community, and because I assume that you believe the power is there, and that will help it grow. Tom, thank you so much for taking the time. I'm excited. Thanks for explaining about PowerTrade, amongst many other topics. It's been very enjoyable for me. I'm sure our viewers at home liked it as well. So once again, thanks, Tom, for joining us here. And for all of us here at Reimagine 2021, I'm Yonah Hochhauser. Thanks so much for watching.